the tariffs were anticipated, but as the previous speaker was saying, I think that they're not having much of an impact. They're well anticipated. They're modest, and they're reversible. The incentive is to keep going further. So I think that the market enthusiasm for the fact that nothing bad happened over the weekend is premature.
If we can talk a little bit about the follow through from Friday with that jobs report. So the market, of course, was surprised to the upside with the growth in jobs. But wage growth, a little disappointing. Fed talking about inflation, but is it really there broadly? And what does it mean for your investment portfolio if there isn't that 2.5% inflation growth?
Well, I think it's probably the best thing in the world for your investment portfolio if the Fed never quite gets to its target, because it means that all the risks that the market is worried about, that the Fed is going to overreact, that real interest rates are going to go up, that neutral is higher than where it is now, all of those risks dissipate. So it's actually a very asset market friendly type of position for the Fed to be in, for inflation to be in.
Stephen, what's the best trade for investors right now with regard to playing the global macro picture as you see it?
Well, you know, I'm an optimist. I think we're going to have a lot of gyrations, but I think at the end of the day, there's enormous incentives to solve the trade issue without going to a full-out war. I think inflation is probably going to remain under control. Overall, I think that the risk-on view is probably will probably emerge as the best one, even though we will go through periods in which that will look, terrible. But I think that ultimately there are incentives to resolve the problems that we're facing.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.